YouTube, how you guys doing? It's CalFX here. So in today's video, we're going to talk about how to identify your high time frame directional bias. And we will talk a little bit about multiple time frame analysis as well. So before I get into the video, guys, I got to do the YouTube disclaimer stuff, right? I'm not a financial advisor. Any topic discussed here is based upon my own experience and my deep understanding of smart money concepts. So after you watch this video, make sure you backtest the concepts, forward test it using a demo account. And if you're happy with the results, then you can move to a live account. All right. So, all right, let's get into the video. So in today's video, we're going to talk about how to identify your high time frame directional bias. And the reason why I decided to make this video is because I've had a couple people that DM'd me on my Telegram, and they actually said that they were having problems with marking their trading ranges and pretty much establishing a high time frame directional bias so they can better situate themselves on the lower time frame. And the reason for that is because most of the times, most people don't understand the difference between swing structures and internal structures. I've actually made a video. I actually pop up a link here of the video where I talked about market structure. So the reason why sometimes the structure becomes complex is when you bring together the swing structures and internal structures. So what I mean about that, just to summarize a little bit, right, is let's say you have this push to the downside right here. You have this order block sitting right here. Now, if you ask yourself, okay, where is my trading range? You can clearly see that this is your range high and this is your range low. And you can clearly see that you're on a bearish range, right? Because we had this break of structure right here that took out the previous low to the downside. So what is our expectation of order flow? Pretty much is to see price come into this POI, right? This POI that was responsible for taking out the previous low and continue to move to the downside. Now, everything that is happening inside this sell range, right, is what we call internal structure price action. Everything right here. So for example, let's say this is a weekly break of structure to the downside. You will have to see, for example, a daily change of character. Then you have this change of character. Inside the daily change of character, right, you have this daily range low, range high. Inside this daily range, you will see a 1 hour push to the downside right here. Pretty much price doing a pullback towards the daily POI. So then we can start to see that move to the upside. Then inside this range, you will also see 15-minute push to the upside, pretty much that change of character, right, on the daily 15-minute. So that's when structure becomes a little bit more complex. So most of the times, what happens is that people go, for example, to 15-minute, and sometimes they lose themselves. They don't know what is the high time frame directional bias, where they are from a high time frame standpoint. So I think this is very, very important to be able to understand and differentiate what is swing structure and internal structure. And internal structure pretty much is everything that happens inside a swing structure point. So that means that you have this bearish order flow, right? So you will see a series of stuff like this, right? So you have to understand that this is your swing high, and then you have a swing low. So everything that is happening here, this push to the upside, then this bearish price action, then move all the way to this extreme. All of this is what we call internal structure price action, right? So, for example, if we look, for example, let's look at Euro USD right here, right? You can clearly see that Euro USD from a daily time frame is heavily bearish. And let me just pull up the Vantage source so we can look at it from a 6-month perspective or yearly perspective. So let me just look at Vantage. There we have, right here. So let's just look at Vantage from the monthly time frame, right? We can clearly see that from the monthly time frame, right? From a 6-month, right? We can clearly see that from a yearly perspective, we can clearly see that prices has been bullish, right? Euro USD has been bullish. We see this push to the upside. We have this low, then price made this high, right? So pretty much you can clearly see that from a yearly time frame, we have our swing low and swing high. So this right here is our yearly range low, yearly range high. So everything that is happening right here is just internal structure price action. So we can clearly see that I mean, for years, Euro USD has been on that bearish order flow towards this 6-month POI. So then we can see the continuation to the upside, right? So we can clearly see, for example, right here, we had this high, we had this low, price then made this high, and then price actually made this low right here. Let me just zoom a little bit. Okay, so right here. So we can clearly see that we have that low. Then what happened? What is the job of a low? Is to pretty much take out the previous high, especially in this scenario where we have this bullish structure. The job of this low is to pretty much print a new higher high, and it failed to do its job. So what happens? The low becomes weak. So a weak low is the one that failed to take out the high. So this one became weak, got violated. Then what happened? We had this last up candle before the down move that went on to violate the low. So we had the pretty much price respecting the order block right here. So that's when after this second break of structure, the order flow transition has been established. Then we can clearly see that we had some sort of 50% mitigation, right? Inside this range high and low right here. We can clearly see the price actually came above 50%, which is the premium level, right, for long-term sales. And you can clearly see the price is just pushing to the downside. So you can clearly see that from a yearly perspective, Euro USD has been bullish, but from a daily and weekly, we can clearly see the price has been it's been heavily bearish. But we are seeing that bearish order flow towards this yearly bullish POI. So let me just delete the markups right here before we go to the daily time frame. So if we go to the daily time frame, just a moment. Okay. So we can go, for example, so on the daily time frame right here, we can clearly see that we had this push to the downside. We had a mitigation, right? So what is our structure high? We have this structure high, right? Structure low. So everything that is happening inside of this range right here is just internal structure price action. Then you can clearly see that we had some sort of above 50% mitigation. Price came to the bottom of this order block. And then we had another break of structure right here. So we have our range, our swing high, and then we have our swing low. Price then made this swing high. Then we have a swing low right here. So we can clearly see that from the daily time frame, right? Price is heavily bearish. And we know that from the yearly time frame, price actually, we're waiting to see price to come to that bullish, that 6-month bullish POI, so we can see continuations to the upside. So daily is bearish. So that's how we have established our higher time frame directional bias. At that moment, right? As soon as we go from the 6-month all the way to the daily, we know that daily is a bearish order flow towards the 6-month POI. So that's what we have. We have established our higher time frame directional bias, which is to look for sales all the way to that 6-month bullish POI. Now, when it comes to Euro USD right here, we can clearly see that we have our structure. We had this low, right? Then price made this high, and then price made this low. So we can clearly see right here that we can use the Fibonacci, for example. Let me pull up the Fib, and we can clearly see that from this low all the way to this high, which is our swing structure points, we can clearly see that we're waiting for anything around 50% Fibonacci level or above, which is the premium, right? Pretty much is the premium level for long-term sales. I mean, I'm willing to sell anything around 50% or above 50%. So we can clearly see that we have 2 points of interest right here, one situated exactly 50% and one at around 61.8 Fib zone. So these are valid 2 points. These 2 POIs are valid points of reaction. Now, when it comes to as an intraday trader, me personally, I'm not willing to wait weeks for price to come to my daily POIs, right? Sometimes it can take much longer for price to come to your daily POIs. So I just want to get in and get out. So what should I do? I can go down, for example, to 1 hour time frame, and I can look, for example, for 1 hour change of character, right? So pretty much just to give us that signal that, okay, now the daily time frame is doing a pullback towards the POI, so we can see that further continuation to the downside. So what happened right here? We can clearly see that we had, let me just we can clearly see we had this low, then price made this high, then we had this low got broken right here. And what was responsible for that? We can clearly see that it was this high that did a mitigation on the previous structure high POI right there, right? So we had this strong push to the downside right here. And now what can we see? We actually saw that we had this push to the upside right here. We pretty much, that was a change of character, right? So this is what we call the first sign of bullish intention. So pretty much this was just the signal that, okay, price now is doing a pullback towards our daily POIs, right? So we can then see that further continuation to the downside. Now, when it comes to buys, usually I'm willing to buy anything around 50% or below 50%, which is the discount zone, right? So we can clearly see the price actually reacted. We can clearly see this reaction, which was below 50%. So we can clearly see this sell to buy wicks right here, which means that there is a hidden order block on the lower time frame. So we can clearly see the price actually had some sort of reaction right here, right? So you have this 1 hour, for example, this 1 hour sell to buy wicks POI. What can we do? Just to increase the strike rate, we can go, for example, to 5-minute time frame, right? So let me just go to 15 or even 15 or 5 minutes, right? That's totally fine. I think we can use the 5 minute. So on the 5 minute, we can clearly see that we had, as price was coming to the POI, we had the structure low, high, and then price made this low. We had a break of structure right here, right? Then we had this another break. Price actually didn't come to the extreme of these POIs, but then we had a significant break of structure right here. We can clearly see that we had a nice solidified high and a solidified low. Then we had this strong push to the upside right here. And we had a nice order block right here, which pretty much was this less down candle before the up move. We can clearly cover the bottom of this order block. So, I mean, for people that don't have time to be on the charts to go to lower time frame to look for much better risk to reward ratio, you guys can just enter off the 15-minute POI, right? Pretty much just using a 15 pips stop loss just to give 14 pips stop loss just to give a round number. And your target is supposed to be this daily POI right here, as that's our expectation of the flow, right? Is to see price coming to this daily. So then we can look for further continuations to the downside. So as you guys can clearly see, how we were able to pretty much identify, how we were able to situate ourselves on the 5 minute starting from the 6 month. So pretty much that's how you build a story. And I've heard that some people think that trading using the counter trend is a little bit risky, right? I mean, I'm also a fan that, you know, the trend is your friend, but when it comes to counter trend, it's important that you build a story, right? Because it has to make sense. For example, from the daily time frame, we know price is not just going to push to the downside. Eventually, we will need to see some sort of correction, right? Which is a pullback towards the POIs that were responsible for taking out the previous lows, right? So as an intraday trader, we just want to find ways that we can actually join the pullback towards our higher time frame POIs, right? Especially, for example, in this case, it was Euro USD. We're just trying to find a way, how can we join the move, right? How can we ride the bullish order flow towards our sell POI, so then we can look for continuations to the downside, right? So we can clearly see that we went from the daily, we dropped down to the 1 hour time frame, right? So on the 1 hour time frame, we wanted to see what? A change of character, and anything around 50%, which is the discount, that's totally valid for you to look for buys. So right here, we can clearly see price actually getting close to our first POI. Now, when it comes to this POI, we can clearly see that the range of this POI is huge. I mean, it's about 100 pips. So right here, I wouldn't recommend you guys to look for when the range of the POI is above 30 pips. I don't recommend going straight to 1 minute to look for, you know, a change of character so you can sell, right? For long-term sales. I recommend, in this scenario, I recommend a 15-minute change of character so we can clearly see that, okay, now price is about to pretty much continue to move to the downside, right? And also we have this POI the extreme, which is also a valid point of reaction. So anything, if price actually gets to this POI, I would love to see some sort of 15-minute change of character to the downside, right? So that's it for the for the high time frame directional bias. I hope I was able to pretty much explain it in simple terms. Now let's get into another part of the video, which I just want to touch on the multiple time frame analysis. So when it comes to multiple time frame analysis, right? As part of just to pretty much do a continuation on the high time frame directional bias, it's very important to understand, as I was saying actually before, it's very important that we understand the swing structure and internal structure. So if you look at, for example, at this scenario on USD Swiss franc, we can clearly see that we have, for example, price actually right here was bearish. We can clearly see price breaking the high, the lows protecting the highs, right? We can clearly see price just breaking structure. Now we had this solidified low, then we had this solidified high. Then this high was responsible for taking out this previous low and it did this job. So we had the low right here. Now what happened is that we had the first sign of bullish intention right here, what we call chalk. Now, what is your trading range right here? The trading range is where you have to mark the swing structure, right? The swing structure are your ranges. So you have this swing low and then you have this swing high. So everything, so because you're on a bullish range right here, you should be looking for buys, right? And so in order for you to look for sales, probably, okay, we have this daily POI, right? This less down candle before the up move. So on the lower time frame, such as 15 minutes, yes, you could have looked for change of character, so you can sell all the way down to that weekly POI, right? But when it comes to your ranges right here, you can clearly see that we can clearly see that this right here, this is your range high and this is your range low. So we have the last down candle before the up move that were responsible for taking out the previous high. So this right here is your order block right here. Now, anything that is happening inside this range low and high is what we call internal structure price action. So everything right here that you're seeing, this is just the internal structure. We can clearly see that we have some sort of change of character. We had a mitigation right here and price just pushed to the upside. Now, as we know, right, from the previous videos, chalk is not a confirmation of trend shift. It's just the first sign of bullish intention, right? So we have a bullish intention right here. Pretty much this is the intent. Then we had a mitigation right here, right? So then we had the second break of structure. Now, where is our range low and high? Our trading ranges, range low, and then we have a range high. So from a weekly time frame, we can clearly see that the structure is bullish. And this actually coincides, for example, with the fundamental analysis that we can do, for example, on USD, right? We can clearly see that with the constant interest rate hikes, we can clearly see that the dollar is very valuable right now, right? So we can clearly see that the structure just pretty much reflects the news, right? So just to mark up, for example, we can clearly see that we have this push, which was the break. We had right here a beautiful mitigation right here at this order block right here. So this is pretty much is our invalidation point, which means that if price breaks this line, it just invalidates this bullish order flow, right? So we have another second break of structure. Pretty much this is a confirmation of that bullish order flow transition, right? So we have a down candle before the up move that was responsible for taking out this previous high. So there we have, so we are on a weekly POI. So what should we do? We can go down to daily time frames. So right here, we're doing our multiple time frame analysis. So we come into the daily, the daily chart. So inside of a weekly POI, what do we want to see? We want to see a daily change of character. We can clearly see that if we read structure, we had this low, we had this high, price then broke structure right here, and it made this low. So we have this low, solidified high, then price made a new low right here. So what do we want to see in order to buy? We want to see some sort of change of character. So we had a change of character right here. We had price coming down to this, pretty much this order block right here, the last down candle before the up move. We can clearly see that all these bullish candles are inside this one down candle right here before the up move. So we can clearly see that price actually did its job pretty much to mitigate the bearish candle right before the up move. So just to mark it up, we can clearly see that we had our change of character right here, right? So this was our change of character. We can clearly see that we had a mitigation right here, and we can mark it. So this line right here is our mitigation. Then we had a second break of structure, pretty much just confirming on the daily that price is pushing towards the upside. right? So we have on the daily time frame also that bullish order flow transition. So we saw that on the weekly time frame, and now we're seeing exactly the same thing playing out on the daily time frame. Now, where is the daily POI that was responsible for taking out the previous high? It's sitting right here. We can clearly see is this guy right here, right? I think this POI we can pretty much see much better on the 4 hours. So let me just go down to the 4-hour time frame. So that's absolutely right. We can clearly see that we have a beautiful down candle before the up move, right? So now the question is, we're waiting for price to come this POI so that we can clearly see further continuations to the downside, right? That's pretty much the analysis we have on USD Swiss franc, right? We have the daily 2 breaks of structures. Now, price, we're waiting to see price coming towards the daily bullish POI so we can see continuations to the upside. Now, what happened right here? If we, as an intraday trader, right, as I told you, I usually don't wait that much. I mean, I personally don't have that patience to wait for weeks for price to come to my daily or weekly POIs. So what would I do? I would just go on the lower time frame, for example. We're on the 4-hour. We can clearly see the price had this high, then it made this low. So what is the job of this low? It's pretty much to create a new higher high, right? Pretty much to keep the bullish order flow intact. What happened? Price actually failed to create a high high, what we call high reluctancy. Then we had price actually breaking structure. Now, price broke structure, that was the first sign that price, that on the 4-hour, we're seeing that order flow transition, right? From bullish to bearish, pretty much towards our daily POI, right? Now, where is the order block? Some people will say, well, Calvin, I'm seeing that the order block is sitting up here, right? We have this last up candle, right? Before this down move that went on to take this previous low. Now, this is you're very correct, right? If you mark this right here, or even this week right here as your POI, that's correct. That's the extreme order block. But if you come closer, right, you will see that we had this buy to sell wicks, right? We can clearly see that the structure was broken right here, right? At this particular moment. Now, you can clearly see that this candle almost closed below, but then what happened? Buyers came in, pushed the candle up, right? Pretty much to negate the break of structure right here. So that means that we had the last buy candles before the down move that went on to finally to complete that break of structure, right? Right here. So that means that this these buy to sell wicks are a POI on the lower time frame. We can clearly see probably on the 30 minutes, there is a last up candle before the down move, right? So this is the decision, or what we call decisional order blocks. And if you have some sort of understanding of some sort of retail concept, we can clearly see that this actually ties perfectly with the break and retest zone, right? We can clearly see here that this actually was a zone of traffic, right? We can clearly see that we had a reaction here, push to the downside, a break, a retest, then price. We had that bullish depletion, right? Pretty much price failing to put a high, a break, and then we have a retest at this previous key level, right? So we can clearly see that this buy to sell wicks, right, which is a decisional order block, it ties perfectly with the break and retest zone. So what would I do? I would, in this scenario, I could go, let me just see the range of the order block. We can clearly see it's around 20 pips. I mean, anything around 20 pips, I can go straight to 1 minute time frame or 3 minutes. So for example, let me just go down to 3 minutes to see how I could have entered. Usually I don't trade USD Swiss franc, but just for educational purpose, let's see how we could have entered. So we can clearly see that we have this low, the price made this high. So we had a change of character right here, right? We had the change of character. Then we had, what is the order block that was responsible for that? It's sitting right here. So this right here is your order block. Now, me personally, I don't trade chalks, right? I usually, for me, they're not that reliable, right? I much prefer to trade 2 breaks of structure. But for people that like chalk, for example, this would have been a nice entry. You could have covered this high, or to be a little bit aggressive, you could have covered this low right here just to give a 7 pip stop loss. And you could target, I mean, your target could have been somewhere here. This would have been a 1 to 8, which is very good. But your high time frame or expectation of order flow right? Because we did a high time frame analysis from the weekly all the way to daily, pretty much is to bring price to that daily POI, right? So then we can see the continuations to the upside, right? So that's pretty much uh, it, guys, for when it comes to multiple time frame analysis, right? Make sure you mark your ranges, right? I mean, this is very, very important. Make sure you mark up your daily ranges, right? Your weekly ranges, your daily ranges, and especially consider the swing structure, because internal structure most of the times can be very confusing when it comes to determining your high time frame directional bias. So I recommend to mark up your swing high, swing lows. So anything inside the swing highs and swing lows is just what we call internal structure price action. So we can clearly see right here, clear as day on the USD Swiss franc. We had a tap on the weekly bullish POI. We had a daily 2 breaks of structures, right? The change of character. We had a mitigation. We had a second break. So our high time frame expectation or order flow is to see price coming towards this daily POI. So then we can see a continuation to the upside. So at this POI right here, I mean, let me just see, the range is about, 50 pips. I would recommend, we can clearly refine this POI, for example, to the 1 hour. Yes, to the 1 hour. This right here is a very clean order block right here. Now, for people that don't have time, this is just a great opportunity for buys, right? We can clearly set a limit order at this POI, pretty much just cover the low of that 50 pip stop loss, and your target is supposed to be this high right here, right? Pretty much just to keep that bullish order flow intact that we see from a high time frame perspective, right? But to increase the strike rate, I would recommend to, soon price gets into your POI, you can look for 5-minute change of character and then look and then take the trade, right? So guys, I'm going to end the video right here. I hope I was able to explain pretty much how to determine your high time frame directional bias and how to properly do a multiple time frame analysis. So if this video was good, guys, please hit the like button, right? Subscribe if you're new to the channel, and any videos, any topic that you guys don't understand, that you guys want me to make a video, feel free to leave the comment down below, and I see you guys next time.